Hey everybody, it's Brad. Welcome to the ES chart review for January 26, 2023. Before we get started, I want to just say that the intention of this video is for educational purposes. I'm really just trying to journal my journey in learning ICT theory and trading futures. This is a really good way for me to just sort of reflect on the day, and hopefully you guys can get some knowledge out of it too. I am by no means an expert at ICT theory, so I'll put a link in the description where you can go find his channel and view his videos if you're interested in learning more about his theory and go through his mentorship programs. I think it's I talk about it all the time. I think it's really just amazing information. Even if you don't believe all the concepts he talks about, I would just recommend that you have an open mind, go through the mentorship and learn from his, like 30 plus years of trading knowledge. So I'll leave a link in the description. If you're interested, go check him out. You should not be learning ICT theory from me. This is for me to reflect on what the market did today, what I understand of his theory, and some places where I got it wrong, and what I should look out for in the future. Anyway, we'll go ahead and get started on the one-day chart for ES. This is a clean chart, and I will try to walk through what I was thinking before the market started. Actually, I said it's a clean chart, but it's not, is it? Let's remove drawings here. All right. So this was yesterday's candle, the 25th. We had this drawdown to the midpoint of this gap, and then we shot up, right? This was expected, and this was seen as the retrace back into gap and jumping off point for the next move up. So with how price behaved yesterday, and it sort of behaved as we expected, the next expected move, I think, is a move up, right? So that was the initial bias starting out. The targets that we were going for. Okay, so when you're looking at this and the day hasn't opened and you're just sitting here, you think, where could you go, right? One of the guesses I had was this wick here, initial target could be 50% point of that wick, which we did hit on Tuesday, which led to our coming back down into the gap and then shooting off, right? So one target could be there, and then you have to start looking over, right? This run up took a lot of this buy side liquidity off the table, right? Like it swept up, cleaned up a lot of this. Now what's left, right? If you look at this candle wick, we've cleared the top of this candle body. Just about, well actually, yeah, cleared the top of this one as well. So we're looking at wicks. The wicks we're looking at would be here and here. So this is one thing that I'm pretty sure of with ICT's theory, and that's that he considers gaps. And when I say he considers gaps, the theory he teaches is all about the algorithm. The algorithm considers wicks gaps, right? So when we're looking for stuff like this and we say, hey, it should come down here, we really want it to hit this target and see that as a point where it could reverse, right? We'll say the same with Wicks, okay? So the wick here, I was basically just using as maybe a price target for when the run up started, to take partials or something like that. But I was really, I was really confident in a bullish move to start the day, and I was pretty confident that this was the first target, right? 40.7275. All right. Didn't end up playing out exactly like that. And we'll go ahead and dive into the lower time frames to see what did happen. Now I'll mark out this gap. This was a consideration, like maybe we come back into this gap a little bit. This is likely due to me not really understanding or having enough experience to know what to exactly expect. But let's go ahead and jump down to 4 hour and see if we could see any other reasonable expectations. So we did have this big 4 hour gap. This big 4 hour gap, I'm going to plot it out, pull it over, right? So this was Monday. We came in to that gap on Monday. And let's plot out the 50% line. And how perfect can you get, right? Look at that. So 50% line of that gap. Monday, we tagged it perfectly. Didn't even go over one tick before we started coming down and down even further. We have a gap here. Now this is the daily gap. Remember, we had that line. Come down here to the daily gap, start moving up, and this is where we start our day. So since we've already tagged that, it's a target, but I think it's something we should probably expect us to get through today. Now, doesn't hold through it, but getting through it is important. Let's get this gap out of the way because it's not really that relevant. I'm even gonna remove that 50% line, but it's just something to look at. The other thing, which I didn't get initially, I did mark out these other 2 points, right? So obviously the top of that big wick is a big, huge buy side target. I mean, tons of liquidity there. And then the top of this one, also a big target, right? 40.9075. I thought top of this one might be the afternoon run. When I was trying to play out in my mind what would happen in the morning, I thought, oh, we'll get to 40.7275, and then we'll go ahead and make a run at 40.9075. Obviously didn't happen, but we'll see in the lower time frames what did happen. Now, one other thing I want to look at, this is the breaker, and I actually want to go to the 1 hour here. So we go back to that same sequence on the 1 hour, and we want to look at the candle that went in the reverse direction before the dump, and this ICT calls the order block, right? So this is a bearish order block before we started our dump that we were in for a while, right? This happened Wednesday, December 14th. We're down here for a while. Remember, we came up, came back down, you know, gap touch, and off to the races. This is something that he called out and that I wasn't aware of due to my experience level. So let's look at this. Not breaker, sorry. Bearish order block. And another thing with the order blocks, there is a concept that he talks about. I always call it CE, consequence encroachment, but there's a different term on the order blocks. I believe he calls it mean retracement or something like that. So you want to look at that as well, and that would be 40.8125, right? And we could even try to expand that order block here, maybe look for something there too. 40.6775. So these are things to look for, right? When you're looking for targets. So I'm going sort of into chart setup here, but for the recap, let's get back to the recap. All right, let's jump down to the, I'm trying to remember what 40.76 was, because I know I had a target there, and that was my main target of the day. I'll try to recall as we go through these other time frames here. All right, so here's 15-minute. Look through that same sequence here. $40.76. Then we have our 5-minute. And let's actually jump down to the 1-minute. So there's a couple things I wanna show you. I'm totally blanking on where I picked my final target. But let's talk about the start of the day. So pre-market, we had this little run up, right? We took highs, we took lows. We created a gap, a couple gaps. Gap here, you see that? Traded back into it and started this run up. 9:30 continued and ended the run. And we start pushing down, right? I'm still thinking at this point that I'm looking for the start of the run to 40.7275. It comes down here. I think to myself, we're going to take out this low, right? I don't enter. You might ask why. It's a good question. My bullish bias really, I didn't let go of it. And I probably should have, but I wasn't believing in too much of a retrace like we saw. So either way, we retrace. I was trying to be patient, look for an entry going up. And this is where I thought that we got it, right? So we come down here, we make a swing high, 10.05. We crush through it, create a gap, right? Let's draw out this gap. This is a 1-minute gap. So what I start looking for is a retrace into that gap. And actually there's another gap here. So I'm looking for both. I'm trying to be patient as I wait for it to come down here. But this sequence happens, right? We get a run up. It takes out this swing high. And this is where I went wrong, I think. I should have thought, let's take the swing high as a win, right? Let's take that as was the objective of the move, right? I still thought, I'm going to be patient. I'll wait for it to get to the gap. I wanted it to go in the gap because that's what I know, you know. My experience really showed this morning anyway. We come back here into the gap and I enter along to this level here, thinking we'll come back up there, 40.68.25, right? Let me check something on the hourly real quick. 40.68.75. Still trying to figure out what the hell the 40.76 is. Oh yeah. All right. Back to the 1 minute. So about this time, I see a tweet from ICT that is targeting these lows, right? Saying, okay, we're going to make a move on these lows. And this is one of the first things I want to show you as a little tip when you're following someone on Twitter and you're trying to understand their shouts. You know, ICT is a little vague with stuff. You know, he's not calling out plays. It's not a signal service. He just tries to bring attention to certain things. And with TradingView, what you can do is you can copy the link to the tweet and you can paste it onto the chart. It's pretty cool. And then we'll put it on the chart attached to the candle that matches the timestamp. It's pretty neat. So he called out, I would want to see it reject that fair value gap immediately or it's no good. And I'm thinking, oh shit. He's talking about this. This is a 1 minute gap that is bearish, right? We created, and this is a common theme the last couple of days for me. We came down here, we created a swing high, we broke it. I think run is on. It took out another swing high. Move was done. It created a swing low and broke it back, right? Created a fair value gap, traded along, hit these gaps, right? Showed a little bit of movement, baiting me in, traded back into this gap, and that's when he sent that tweet. I would want to see it reject immediately or it's no good. And what does it do? Rejects immediately. Takes out more sell side. I actually got out. Luckily, I saw this tweet and I started to reevaluate my trade. Got out break even. So, yeah, just another learning moment for me. But let's talk about I do want to mention one more thing with this move. At 10:14, you know, I saw this as an order block here for more upside. When that snapped, creating the gap is, you know, snapping the swing low here is one thing. Snapping the order block and creating the gap, I think, is another. So, like I said, still new to the theory. So feel free to explain if you think that's wrong, but that's where I'm going with that. Is snapping that break or that order block. What should have really made me stop and think, especially creating a gap and then coming back into it, right? So went wrong there, but it's okay. Live and learn, right? Trade another day. At this point, we get down here and we actually start our run. The entry to this was a little choppy, right? So I actually didn't join in for the rest of the run. Let's mark our lunchtime here. The AM run. I didn't join in on. I was feeling pretty low confidence after I botched this play. This seemed a little choppy for me. Wasn't loving the price movement. Ended up coming up a little bit, but I decided to wait until the PM session to try to get in on a move. And I did get in on a move. I got on, I believe, this move here. So if you see, we've finished lunch. We're still a little sloppy. Sorry, it was actually this move right here. I need to take better notes throughout the day, huh? So this move here, we're chopping around a little bit. We make a strong move up, break a swing high, create a gap, come back into the gap. I feel like runs on, it clearly started a little run. Lunch got weird as always. And then we're continuing the run here, right? Got a little hairy. I exited at this point. Okay, we came up, came back down. Sorry, I actually exited at this point, created a swing low, and we broke it with a gap. So this was my condition to exit, and I went ahead and took the profits that I could secure there. The whole rest of the afternoon play, I felt like it was very sloppy. And the reason why I felt like it was very sloppy is because I would see these swing lows, I would see them break. I would say to myself, okay, this is creating a gap, it's going to come back into it, and it's going to react, right? And a lot of the time it did. Like, let's look at this gap here. Oops. Let's look at this gap here. So this gap, I'd see that. We had a strong move down, broke this swing low, came back into the gap. Right at this candle, it would react. And I considered shorts a couple times. But in the back of my mind, I was thinking, man, this just doesn't feel right. I was looking at this as the order block. We're in a bullish run. So I was looking at this guy right here as the order block. So as long as that stayed, I was pretty nervous about trying to get in on a short. So I basically just watched this. Now, it did this over and over. Swing low, break, continue up. Swing low, break, continue up. Swing low, break. Yeah, it's pretty weak, but technically break. No fair value gap, so I wouldn't even count that. But that kind of action just happened all afternoon, and I thought, this is just way too sloppy for me. It eventually got to my price target, like pretty exactly. I was targeting 40.76. Smashed up through that and then came back down, and I thought that was really cool to see, but I wasn't able to participate. So we were pretty low volume during this, and usually I don't care about the volume, but I feel like the volume, when you're looking at 1 minute charts, it really just makes it look a lot sloppier than it is, right? And what I need to do better at in this case would be to go to the 5 minute chart. So ICT put a link to a video after he did call this move. You know, he followed this move up, and he was looking at the 5 minute chart. And I looked at it and I said, damn, that is so much more clear. That is so much more clear that the trend is on, you know, the move is on. We're heading to the target, even during lunch. You know, if you are following the rules of the 5 minute gap or the 5 minute chart, you know, you have a move up and you have the order block here. You have a fair value gap. Even during lunch, we break the rules a little bit, bend the rules, I guess. But it holds up. That gap holds up. We come back and tap the order block, right? So here's the order block. Here's the bullish order block. So yeah, followed the rules, created another gap up, order block, doesn't even get back to it, comes, hits the gap, respects the gap every time. It is a weird step up, but never at any point does it break the rule that I have been trying to follow, which is create a swing low and break it, right, with a gap. Never does that. Did it a lot on the 1 minute chart. So this is just a reminder for me to keep looking at the different time frames. I put them up, and I still just sort of, you know, hone in on the 1 minute. You know, I get sort of blinded to the other stuff. Struggling with bias a little bit, and struggling with, you know, hyper focusing on one time frame. So I think that's the big lesson of the day. Even this 5 minute here, right? The morning move that showed up on the 1 minute where it created a swing low and broke it, it showed up on the 5 minute too. It never showed up on the 5 minute here. So learn to look at different time frames and trust the rules. Hopefully I can try to see some of these runs through. But yeah, that pretty much wraps it up for today. I really loved the price movement, especially in the afternoon. It worked out pretty well. So yeah, keep learning. Let me know if you have any questions, and if you have any insights, please drop me a comment, and I would love to read any of that. So thanks for watching. I'll talk to you later.